If you're holding stocks right now or thinking about buying any dip that looks attractive, stop scrolling, stay right here, and pay very close attention. What I'm about to explain could easily save you thousands of dollars, protect your portfolio from unnecessary losses, and position you for the next major move in this market. This is Stock Predictor, and today's video is something every single investor needs to hear. Whether you're new to the market or you've been investing for years, the next few minutes could change the way you look at your entire portfolio strategy. Let's get right into it. Over the past few weeks, you've seen the market behave in a way that feels confusing, unpredictable, and in many cases, downright frustrating. Stocks are showing strength one day and collapsing the next. Sectors that normally move together are suddenly moving in different directions. What used to feel predictable now feels chaotic. And investors everywhere are asking the same question: what is going on, and what should I do right now? Here's the truth most investors don't want to hear, but need to: the market is transitioning. And transitions are messy, volatile, emotional, and full of traps designed to shake out weak hands. Every major market shift in history starts with confusion. You are living through one right now. That's why you're seeing volatility spike, fear increase, and narratives change almost every day. And if you don't understand what's happening, you'll make the worst mistake any investor can make: react emotionally. Let me be crystal clear: emotional decisions destroy portfolios. They always have, and they always will. Fear makes you sell when you should be patient. Greed makes you buy when you should be cautious. Impulse makes you chase stocks already at the top, and panic makes you dump stocks right when they're at the bottom. And right now, the market is engineered to pull both emotions out of you at the same time. That's why today's message is so important. If you've been holding stocks that are down big, you're probably wondering if you should sell now before things get worse. If you've been holding stocks that are up, you're wondering if this is the top and whether you should take profits before the rug gets pulled. And if you're sitting in cash, you're wondering if now is the time to get in before the next rally begins. None of these questions have simple answers, but they do have smart answers. And that's what we're going to break down. First, let's talk about what the market is signaling right now. When volatility spikes, and you've seen that in a big way recently, it usually means uncertainty is peaking. Investors don't like uncertainty. They sell first and think later. But here's where experienced investors separate themselves from emotional traders. Volatility does not automatically mean danger. It means opportunity. Some of the biggest gains in history come after periods of high volatility. But here's the catch: you only benefit if you understand the cycle you're in. Right now, the market is sending early signs that we are approaching a major decision point. Not a crash necessarily, but a shift. And shifts create winners and losers. Companies that looked unstoppable during the easy money era are showing cracks. Companies that were ignored for years are suddenly waking up. Money is rotating, not disappearing. And if you're paying attention, you can see exactly where it's going. But most investors aren't paying attention. They're watching headlines, not data. They're reacting to tweets, not fundamentals. They're panicking about short-term dips and ignoring long-term opportunities. And that's exactly why every stockholder watching this needs to step back, take a breath, and analyze the situation with logic, not emotion. The first thing you need to do right now is this: review your entire portfolio with brutal honesty. Not hope, not bias, not attachment. Ask yourself one question for every stock you own: if I didn't already own this stock today, would I buy it right now at this price, knowing what I know about the company? If the answer is yes, you're probably holding something worth keeping. If the answer is no, you are emotionally attached to a losing position. That is one of the most dangerous mistakes investors make. The second thing you must do is understand whether your positions are long-term strategic plays or short-term speculative trades. These are not the same thing. You treat them differently. Long-term positions should not be shaken by short-term volatility. If the fundamentals are strong, if the business is growing, if the company is executing, then volatility is nothing more than temporary noise. But speculative trades, those need strict rules. If you're in a high-risk stock with no profits, no cash flow, and nothing but hype, then yes, you need to be more cautious right now. The market is no longer rewarding hype. It's rewarding discipline. The third thing you need to understand is this: cash is a position. Let me repeat that for the investors who feel the pressure to always be fully invested, cash is a position. Cash gives you power, flexibility, and opportunity. When the market drops, investors with cash are the ones who can buy when everyone else is panicking. You don't have to be 100% invested all the time. That's a myth. Smart investors balance exposure with opportunity. And right now, having cash on the sidelines is not a weakness, it's strength. But here's something important. Staying in 100% cash because you're afraid is not investing. That's just fear disguised as caution. The goal is balance. You need exposure to high-quality companies that can survive any market environment, and you need enough cash to take advantage of dips without panicking. The fourth thing every stockholder needs to watch right now is earnings. Not headlines, not predictions, not hype, earnings. Earnings are the truth. They reveal everything. Demand, pricing power, margins, customer retention, growth, guidance, and the company's health under real market conditions. You've already seen companies with weak fundamentals collapse 20–40% overnight after reporting bad numbers. You've also seen companies with strong fundamentals explode upward when they show resilience. Earnings season is exposing the difference between real strength and inflated hype. And if you're not paying attention to earnings, you're flying blind. The fifth thing you need to understand is market psychology. When fear peaks, opportunity increases. When greed peaks, risk increases. Right now, we're in a strange hybrid of fear and greed, depending on the sector. Some sectors are priced for disaster, while others are priced for perfection. That almost guarantees volatility, and that's why you need strategy, not emotion. So what should you do right now? Here's the framework smart investors are using. Number 1. Protect your winners. If you have strong stocks that are still trending upward, don't sabotage yourself by selling too early just because you're scared. Raise your stop loss, take partial profits if you need to, but don't dump great companies unless the fundamentals break. Number 2. Cut your losers with discipline. If a stock is down not because of the market, but because the business itself is falling apart, get out. Hope is not a strategy. Your money can work better elsewhere. Number 3. Build a shopping list. Make a list of high-quality stocks you want to own, with levels where you want to buy them. When volatility hits those levels, you buy, not based on panic, but based on a predetermined strategy. Number 4. Diversify smartly. Diversification doesn't mean owning 30 random stocks. It means having exposure to different sectors and risk levels so one bad move doesn't sink your entire portfolio. And number 5. Stay focused on the long term. Every correction in history has eventually been followed by new highs. Every crash has eventually recovered. Investors who stay disciplined end up wealthier than those who panic. If you are a stockholder watching this right now, understand this: the market is designed to test you. When things are easy, everyone thinks they're a genius. When things get turbulent, only disciplined investors win. This is the part of the cycle where emotional investors lose money and strategic investors prepare to build wealth. Your greatest advantage as an investor is not timing the market with perfection. It's controlling your emotions and sticking to your strategy. Volatility is not your enemy. Fear is not your enemy. Your reaction to them is what determines whether you win or lose. So before you buy, before you sell, before you panic, before you celebrate, think. Analyze. Be patient. Be disciplined. Because the next big move is coming. And the investors who prepare now will be the ones who benefit the most. This is Stock Predictor, helping you stay ahead of the market with clarity, strategy, and real analysis. If you found this valuable, make sure you subscribe, turn on notifications, and drop a comment telling me what stocks you're watching right now. Stay focused, stay disciplined, and remember, smart investors don't react, they prepare.